So the Italian referendum happened, and everyone knows that these kind of things you want to expect an increase in volatility. My broker actually doubled margins on certain futures contracts to compensate for the extra volatility. And for Forex traders, I'm going to look at the Black Diamond Trader. And the Euro US dollar is the one that everyone talked about, rightly so, that would be affected by the referendum. So what I want to show you is just leading into the referendum day, we had a flag that was forming on the daily chart of the Euro US dollar. You can see that there's sell trades in through here. This one you wouldn't take because the trend isn't that strong. But let's just stay on track here. So we had some volatility compression, just what you can call these as well. In this pair, there were some short trades setting up that you may or may not have taken. If you just went systematically and looked at the system, you'd say, okay, well, there's a short trade. I'm going to take it. I'm going to take it. I'm going to take it. You got chopped around. You got one. It went in your favor a little bit down through here. But for the most part, we're sitting in, that's about 56 pips it dropped. But knowing that we had the extra volatility that was probably going to come into play, this is the kind of thing that you'd want to sit aside on. So no matter what system you're trading, you don't want to be blind to what's going on in the world. All right. So when you have these kind of things happen, like when we had Brexit happening, you don't want to be sitting in the market when those happen. However, when those things are taking place, are there opportunities available? And you really have to, especially if you're trading futures, look for slippage. Okay. If you're trading the spot Forex market, you're probably a retail trader and you're trading mostly with your broker who's fulfilling the other side of the trade. So you're not going to get slipped. What you're going to get mostly is a higher spread. So just make sure you're factoring that into your trade. So let's just go down the 4-hour chart, because on the daily chart, there's nothing going on. And you can see in through here, the 4-hour chart, again, this is back on the 2nd, the 4th, the 5th. See what's going on through here. And you want to let this stuff happen. Okay, I'm making this video on the 6th. The referendum was on the 4th. So we had a couple of days. And you can see this is the 5th. What we're getting here is basically this big red dot is a trend change to the downside. All right. Remember, this is indicator based, right? Different programming with the indicators and custom indicators. So they're always going to lag price action. They're always going to lag price action. It doesn't matter if you're making your own system up. If you're using an indicator, you're going to lag price. That's just the nature of price-based indicators. So you could see that we're rising up here. We've got a breakdown through here. Now that breakdown happened on the 4th. Okay. And you can see here we went to the downside and now we're back to the upside on the 4-hour chart. And this is the primary long trade. If you look down here, we had not yet broke above our trend strength blue line. But like I said before, a lot of traders, what they'll do that trade this, they'll look for this rising up, which means increasing strength, and look for trades. You could also simply, just use basic price action. When you get this kind of action happening and you get a break below and it immediately rejects back up, that's not bearish, that's bullish. All right? So you might be looking that you might be involved in this trade. But again, this is just playing out. We're looking at a 4-hour chart, so there's not a whole lot of bars that have printed since the referendum. So you'd want to go down to take advantage of these kind of moves. You want to go down to a lower time frame, keeping in mind spread costs, keeping in mind your overall risk. And you could see that here's the 5th. This is the morning. What do we got here? This is the morning. Okay, so you're looking at 5 o'clock. This is Eastern time. On the 5th, which is Monday morning. Well, the market's open. You can certainly trade these. So you would just take a look. We get this big move up here, but if you look down below, we had not yet had, well, we have actually, I'm sorry. On this line here, we've gone up. Now, this is simply a change in trend, these thicker lines. And there are traders that will take these trades because they are called the primary long trades. Other traders will wait for these smaller dots, right, which are basically add-on positions, right, secondary longs, as you can see here. So if you took this trade here, even though it talks about in the rules using limit orders, your order would have been placed down here. Now remember, this blue dot formed as soon as this smaller candle closed. All right. So the low on this bar, let me just bring this up here 1 second. So I want to make sure I'm giving you the right information, okay? So the low on this green candle came in at 0.594. The long was at 0.594. So you did get into this trade if you use limit orders. But I've always said that I'm a bigger fan of using stop orders, either buy stops or sell stops. So if I was to take this trade, I would not have gotten in until this candle broke. All right? I want momentum in my direction. Right? If I'm trading a long trade and the market's coming back, I'm buying into weakness. I don't want to do that. Unless, of course, it's a different play I'm going to be using, such as scaling into a position. So we're looking at this trade right here. I'm going to go with this one. I'm going to the more conservative trade, and this one was at 5:30 in the morning on the 5th, so Monday morning. Buy stop order above that. You can see that this market just kept going up, 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 up. Now it depends how you're going to trade this. Are you going to use structure for your targets? That's a way you could do it. Are you just going to trail up on these dots here? And if you did this, let's say you got in on this trade here, right to the peak is 135 pips. But if you trail your stop, you're going to be getting out right about here, which is 90 pips. 88, 89, 90 pips, okay, depending. If you just placed it right on the numbers. If you looked at that and saw these swing levels, let me just expand this chart a little bit. If you just saw these, where are we here? You saw this here, and your stop initially was here. You've been able to move it up to here, but you give yourself a little bit of wiggle room, right? Perhaps you put it a bit lower. It depends how you're going to manage your trades, okay? But if I'm just going to keep it nice and simple on this, you in your trade here, and you're out here for about 90 pips. And you can also, as you're moving up, you're decreasing risk, right? So each time your stop moves, you've taken risk out of your initial position. You've taken all the risk out of this trade. And depending on what you risked, perhaps up here, you're in a risk-free position. You don't have anything to worry about. And perhaps this is where you decide that you're going to add on, and your add-ons are here, okay? And if you did add on here, you didn't get a whole lot. You got an extra 13 pips. If you add it on here, you get an extra 50 pips. So 140 pips, 150 pips extra, overall on this trade. And now what's happened, the volatility is starting to die off. Our trend strength is dropping, right? There's no setups here, even though you get these dots that are telling you there's trade setups. You look down here, our trend strength, it's weak. Right? We're just going to sit aside, nothing to take inside of this little mess here. And also want to quickly point out that when you see these yellow dots, if you're in a position, that just tells you to get out. Okay? Because there's no concrete direction of the market. Up, down, there's no concrete direction at this time. Okay? And again, like we saw earlier, just pure price, if you just look at trades like this, you've got this base formed up in here. Price broke through, immediately rejected, right? Shot to the upside, couldn't even take out this high. So when that happens, you've got to consider that this movement in here, because it couldn't take out this high, this movement here does not have the same, sorry about that, the phone just started ringing. It doesn't have the same juice. And if you look down and through here, you can see that we're losing that strength in this trade anyhow, or in this price move up here. You would not be in a position here because if you're trailed, you're out here. If you're targeting structure, I don't know what is look left on this chart, but you would not be, you would have been out if there's something in this area here, or if there's something in the area, but it's higher than this, and you can see that price after these big thrusting moves up didn't have the juice. You might have got out of the trade, but you most definitely, when you saw this high put in, this failure down here, right? A break above can't take out this high. You got to be thinking it's time just to get out of whatever trade I'm in. You know, forget about hope, right? Forget about greed. Just get out. And then certainly when you see this taking place here, it's time to pack it in. Anyhow, I just wanted to show the Euro US dollar. Again, I'm Black Diamond Trader, how it's served up some really nice winning trades here. And it's not too complicated, as you can tell. There's a link below. You can pick it up. There's a trial version for it. It also comes for TradeStation. I don't use TradeStation for futures, so I can't show you any futures trades. I would love to. I can just show you the spot market side of it. But yeah, click below and take a trial.